Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what's going on in the markets?
Thank you, Jeremy. Thanks for our listeners jumping on another call. Yeah, we saw stocks hitting some new highs and then they pulled back. So we saw the S&P 500, that Nasdaq, that tech area, really rising earlier in the week with AI semiconductors really leading the charge, and then weaken a good bit when we started to see yields on bonds pop up and inflation concerns really rearing their head again. But tech led pretty narrow leadership. We did see those yields pop up, so we saw a 4% on the 2-year, 4.5% on 10, and about a 5% on the 30-year. That was the first time we've seen that since last summer. Inflation surprised higher. We saw the CPI up about 3.8% year over year, and the PPI up about 6% year over year. Really hot numbers coming in, really putting a question mark on the Fed's direction here with interest rates. So near term, probably strong expectation that they're going to hold steady, but year end, if we're talking about the Fed and their direction, about a 50% chance of no change rolling with the market odds right now, and a 40% of maybe a 25% hike, not a drop in rates, and a 10% chance of a 50% hike. Now, all bets are off if we can get some settling down in some of these geopolitical events, which are boosting inflation in some of those commodity areas. If we look at dollar strength, strengthened a good bit. We saw oil remain pretty firm around 100. And just those stubborn geopolitical events, pretty fragile right now, kind of going back and forth with no real direction or resolution. Precious metals fell late last week, so we saw silver drop pretty sharp, down about 10% on Friday's kind of risk-off move. That's when we saw the biggest drop on Friday. And then we saw a U.S.-China summit, a little underwhelming, if you might. NVIDIA, so looking at some headline deals, we saw NVIDIA reported approved to sell a second-tier H200 chip to China firms, and then China committed to purchasing around 200 Boeing jets. I think the market was expecting a bit more because the potential was at least rumored around up to 750 long-term. If we look at trade policy signals, U.S. considering dropping some tariffs on some low-value consumer goods. Now, the week ahead, we're getting into the middle to the latter part of earnings here, but we still have some heavy hitters coming out, like NVIDIA, just to name a few. That's probably the biggest here. But we're going to be looking at the Fed leadership. That's going to be in focus. We have the new Fed chairman, Warsh, faces some pressure to cut rates. Going to be really challenging in this higher price environment, inflation environment that we're in. Look at some policy debate. A key question is whether AI is driving productivity gains, and could that offset inflation? We got some PMIs as key catalyst, and then light U.S. economic data calendar this week. Internationally, we'll be looking at Canada and UK CPI. Australia's unemployment will be data will be in focus, and then we'll be looking at some geopolitical-focused return back on Iran. Hopefully we can get off with some sort of resolution, which I think will help yields, help this inflation front for everyone. We'll look at the bond market pressure for that yield for the 1 year. That's at highs. But interesting enough, what's also grabbing headlines, and you may have heard of a company that's rolling out a new IPO that's probably going to put a huge influx into the market, and that's going to be the SpaceX IPO. The prospectus for that is looking to be filed pretty soon. They're starting their 20-day quiet period. The target valuation on that is going to be somewhere around 1.25 trillion, offering size somewhere around 70 to 75 billion dollars, and potentially some major Nasdaq 100 addition with a weighting of about 3.5%. Now that's going to put a lot of volume in the market, a lot of shifting back and forth, because a lot of ETFs that invest in the QQQ have to buy in to grab that weighting. So we'll have to wait and see how all that looks like. Jeremy, I'll let you come in.
Graham, well, I had a question for you. So the markets just seem a little choppy right now going into the summer. What's your thoughts on that?
Yeah, I mean, like I mentioned earlier, I think we're not at the end, but we're pretty late in earnings season right now. We got some pretty heavy hitters coming out. I think with the geopolitical events still really in question, pushing the commodity prices up, pushing inflation up, putting pressure on the Fed not to really be able to lower rates. But now with the rumor that they might have to raise rates, pressuring earnings, I think the market might just be getting a little long in the tooth in the very short run. So I expect some volatility here. I think that's without question. Any big collapse? No. But could we see, 5, 8, 10%? Sure. But doesn't mean that I think the market's going to stay down. As long as earnings are in place and we can get some resolution here on the geopolitical events, taking pressure off inflation, those commodity prices, I think the market can come through that as we go through summer, fall, into the end of the year.
Gotcha. Well, Graham, we always appreciate the information and expertise, and thanking our listeners that check in with us every single week. And we look forward to seeing you guys next week. Have a great day.
Take care.